Good morning, everyone. And good morning. Happy Friday. Hopefully, you guys are doing well. Today is January the 6th. It is the last it is the last day of the week. Is it the new music? Yeah, the other one had some like copyright issues, so I think I have to change it, unfortunately. But we should be good with the new music. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. A lot of things to kind of talk about in the after hours. Pretty big drop towards the downside. Bitcoin dropping a decent amount. We had some Amazon earnings towards the downside. Currently, right now, you can see markets are rebounding here in the pre-market. Now with the overall markets coming into today, right, with a little bit of a bounce here, the question is, are we looking for the potential kind of bounce play coming to market open, or are we going to fill the gap back towards the downside and we're just going to end up continuing lower? So that's going to be the main question for today. Before we do that, good morning, everyone. Good morning. Good morning, Little, Victor, TW, Rick, KO, Robert, Andreas, Cody, Frank, Lamit, Yusuf. Good morning, Deuce, Senna. Good morning, Robert, 50, Wakey, Ryan. What's up, everyone? Big, good morning. The Willie, Martin, Inventor, Deuce, Daniel. Yeah, what's up, everyone? Hope you guys are doing well. Hope you guys are having a good week so far. Before we head on to the charts, let me pull up the economic calendar. So coming into today, the economic calendar, we do have some more red folder news, which is going to be at 10 a.m. Eastern Standard Time. The prelim consumer sentiment, which should be fairly big. So coming into today, I am most likely going to wait for 10 a.m. Eastern Standard Time. Usually consumer sentiment, the biggest red folder news event, at least for this week in specific. We just had kind of unemployment jolts. The main thing here is, of course, consumer sentiment, which is going to be at 10 a.m. As for the overall markets, now let's go on to some charts to see exactly what we're looking at. So first things first, if we go into the daily time frame, as you can see here for the ES, if we go into the SPY, we're gravitating down in towards really key levels of support. So as you can see, some buyers stepping in here on the SPY after taking out a key level of support. So coming into market open here, number one, the ES is of course stronger than the NQ. The NQ is a lot weaker. SPY is actually coming right back into a key level of resistance. As you can see, this is the area essentially that we broke down from. So coming into today here for the ES, if we do want to go long in the markets, either we're going to have to find a low risk long opportunity for a potential higher low, or now of course it's going to be the reclaim back above this previous level of support that currently now is acting as resistance. So let's go back onto the lower time frames and pull back up the key levels that we have marked out. So coming into market open, as I mentioned, this is the exact area that, as you can see, we're rejected from yesterday here as well, end up pushing towards the downside nicely. Now with the overall markets reclaiming back above key levels, we're back above this 68.20. We have a little bit of reaction here off our 68.70. What we need to see is now the reclaim back above, as I mentioned. If we want to see some longs reclaim back above, or now it's going to be the bounce play here off our 68.20 coming into market open. We do have a little bit of a gap coming to market open, so we can be looking for that potential pop and fade. Another rejection here off this 68.70 back down in towards our previous day close, along with this 68.20 here for the ES. So the gap fill is very much well in play. So with the markets bouncing here coming into market open, I'm not fully convinced that we are going to have a reversal here on a Friday, at least right off the bat. So I will be looking for the potential pop and fade coming into market open. If we go on to the SPY chart, as you can see right here, key levels that we have marked out is going to be that 682. As you can see, we're just gravitating right back up and towards this key level. You can see we have multiple key levels here as well on the SPY, right? We have this is the level that we broke down from, which is our last week's lows. We now also have our Wednesday's lows marked out here as well, which you can see there's a little bit of reaction off of. So for the SPY coming into today, the key levels that we have marked out really is our previous day highs along with our Wednesday's lows. If we reject off our 682, we can see this nice push all the way back down in towards our previous day close along with this 6 76. So this is going to be one of the main scenarios for the SPY coming into market open. As for longs, as I mentioned, you can be looking for the reclaim back above our previous day highs, which is the 682. Of course, we could also be looking for the bounce play off our 677 for this continued pushback towards the upside. As I mentioned here, with the SPY and Qs gapping up, higher time frame still very much bearish. The number one scenario is going to be the pop and fade right off the bat for a continuation lower, but we'll still wait for that reaction that we have within the first 15 to 30 minutes of market open. And of course, we do have consumer sentiment at 10 a.m. Eastern Standard Time. So we're going to be a little bit more patient coming into today regardless, plus it is a Friday. As for the SPY, right, the level that we have marked out is at 677. The reason why we have this marked out is just because it's a higher time frame key level of support, as you can see right here. If you go into the daily chart, it's just a key low. Just mark this over. You can see some buyers stepping in on the SPY chart, basically just your higher low based off the daily chart. That's why we have that 677. Okay, now let's go on to the NQ. So as you can see for the NQ, a lot more weaker than the SPY this week so far. Really big push towards the downside. Now we're having this nice bounce in the overnight session, just right. All right, we should be back up. Stream should be good. Can you guys hear me and see my screen? If you guys can't, you guys can just refresh the stream and everything should be good. Sometimes it does this every once in a while. I'm not sure if it's a YouTube thing or an OBS thing. Quick refresh, stream back up. Okay, perfect. So as I was saying here for the NQ, it's a lot weaker than the ES. As you can see coming into this week, pretty big drops towards the downside. We're still underneath key levels, which is this 24,800. So coming to market open here, this is the level that we have marked out. You can see yesterday broke underneath, nice continuation, rejected off this level, and we just end up continuing towards the downside. Now bouncing right back up and towards this 24,800. If we want to see continuation lower, back down and towards our previous day close, we need to see the rejection off our key higher time frame point of interest for a push down and towards essentially our previous day close. This is a play that we could be looking for coming into market open here on the NQ. The only way I'm interested in any sort of mean reversion or any sort of bounce towards the upside, reclaim back above our 24,840, which happens to be our Wednesday's lows, for a potential move back up and towards our 25,120. So this is what we have for the NQ coming to market open. For the QQQ, basically the exact same level. So the levels are fairly clear today. It's just going to be our Wednesday's lows, which is essentially the area that we broke down from yesterday. Now we're right back at this general point of interest. So for the QQQ, if we want to reject, we could be looking for the potential pop and fade right off the bat for this push down in towards our previous day close along with our previous day lows. We can actually mark out our previous day lows here now as well. And we can drag this over. So this is our previous day lows, 596. We have our Wednesday's lows here, which is our 601. So shorts are in play underneath our 601 for continuation lower. Longs are going to be in play above our 602. Or if price came all the way back down, potential kind of low risk entry off our 596. So this is what we have for both the SPY and Qs coming to market open. I would like to see the gap fill towards the downside. So we are going to have a very small gap coming into market open with a decent amount of volatility in the overnight session. Along with the pre-market, I am going to be a lot more cautious right off the bat. I'm going to wait for a clear direction in the markets within the first 15 to 30 minutes. Now let's head on to the SMH, IWM, and then we'll head on to some tech names. We'll take a look at gold and silver here in a bit. Let's first talk about the SMH. If you guys do have any charts or any tickers, you guys can start dropping them in the chat. If you guys are enjoying this so far, I appreciate it if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay. As for the SMH, higher time frames still very much intact. So you can see buyers are stepping in nicely here, right off our previous level of resistance. now turning into support. So as you can see right here, so far buyers are stepping in here off this 375, which is a key level support here for the SMH. As you can see, some buyers stepped in here on Wednesday, never made a brand new low. So you can see the QQQ made a brand new low, broke underneath its Wednesday's lows. Similar thing here with SPY. SMH is actually holding up above our 374. Now you can see some nice bounce in the overnight session. So coming into today here for the SMH, key level, of course, is that 374. Other key levels that we have marked out, 386. So as you can see right here, 386, along with our 374. If we want to see some upside today, maintain above our previous day highs for this continued push up in towards our 394 and potentially above, which is our 400 key site. So keep an eye out on SMH above our previous day highs. If we break underneath our previous day highs, we can see this push down in towards our previous day close, which is that 381. So previous day highs is going to be the key level coming into market open. As for the IWM, this one pretty big drop here towards the downside. We actually are coming right back into a key level of support as well, which is just our previous all-time highs. Multiple touches here. Buyers are stepping in here, on the IWM so far. So as you can see, broke underneath key levels. Immediately, buyers are stepping in, reclaiming now back above our last week's lows. So the key level that I have marked out here is at 258.50. If we do want to see any sort of continuation back up and towards our previous day highs, we need to see a hold of our 258.50. Break back underneath, we can see this mean reversion back down in towards that previous day close. So keep an eye out on your 258.50. Now let's go on to some tech names that we have coming into today. Okay, so if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like if you guys haven't joined the free daily watch list. That, of course, is in the description below as well. Can you make a video on which tools you use to draw your levels? I draw common levels, but I would understand more efficiently. Which tools? The tools that I use is Zoom In, if you're talking about this tool. If you're talking about how I draw key levels, I did have a video posted on my second channel. It is currently unlisted here now. I posted it in my free watch list, and basically my free community. So if you want to check out how I draw my key levels, you can basically go there and find the link to that video. All right, let's go into Tesla, short at AMD or Palantir every day. Yeah, shorts this week have been paying very nicely. Overall market just continue to show weakness. Tesla, really anything, right? A lot of nice moves towards the downside. Tesla, Nvidia, AMD in specific after earnings. Now a lot of these ones are at key levels of support. So for Tesla, as you can see on the daily chart, a little bit of reaction here off this 380. This is our higher time frame key level of support. Nvidia is at a key level of support. Tesla's still very much intact towards the downside until we can really break back above our 420 or significant buyers step in here off that 380. I'm still going to be higher time frame, leading more towards the downside. I would like to see potentially that push down in towards that 380 key site. It hit our 390, but not quite 380 yesterday. As for Tesla coming into today, the key levels, as I mentioned, is going to be that Wednesday's lows here as well. So as you can see, what we're going to have marked out is that 400 key psych, multiple touches here. If we want to see some downside, break back underneath our previous day highs, hold underneath our previous day highs for a push down in towards number one, our previous day close, and potentially our key levels from yesterday, which would be our 394 along with our 388. So this is a scenario to keep an eye out for on Tesla coming into today. Still higher time frame bearish. We're going to be looking for continuation lower. If Tesla does want to show any sort of strength, you could be looking for the reclaim back above our previous day highs for a push up and towards our pre-market highs. And of course, another possible scenario, which I'm not really a fan of, which would be the break above our pre-market highs. I'm very cautious on long side. coming into market open, at least right off the bat. Right, if we fill the gap, reclaim back above our previous day highs later into the session, potentially you can see a little bit of a mean reversion coming into close, but at least right off the bat within the first 30 minutes to an hour and a half, I'm going to be very cautious for long side, just because we do have a gap fill towards the downside on the spine cues, right? Every time we gap up in a clear downtrend, I just want to be very cautious. As for Nvidia, hitting off our key level support, this is exactly the level that we talked about yesterday. A little bit of a bounce so far here on Nvidia, but you can see our 171, very key level here on Nvidia. And you can see a little bit of a bounce so far here in the market. So Nvidia bouncing off that 171, gapping up here. So what we like to see coming to market open is the key levels that we have marked out, 170, along with our 176. So as you can see right here, pretty big gap towards the upside, but gapping in a clear downtrend. Be very cautious of the gap fill reversal. So this is going to be the main watch on most tickers today. Pop, right? If we break back underneath our opening range candle, break back underneath our previous day highs, look for this potential gap fill back towards the downside on Nvidia. The gap is all the way back down in towards that 172. So this is going to be one of the main scenarios coming to market open. If the markets do want to go, let's say, bounce back towards the highs. Number one, it's going to have to break above our previous day highs, maintain above our previous day highs, and we could be looking for this low risk entry for this potential push back up in towards our 181, right? If we do want to go long in the markets, the risk reward's fairly tight. I don't necessarily like the longs, but it's just low risk, right? If we break above our previous day highs, we don't have to risk a lot looking for a potential push up in towards this 181. But if we do break back underneath our previous day highs, this is right what your risk reward is going to look like, right? Risk above our previous day highs, and then you can look to take this all the way back down in towards that previous day close and potentially below. So this is what we have for Nvidia coming into market open here today. As for AMD, this one pushed all the way down towards our key levels. So AMD, really nice push towards the downside yesterday, along with the rest of the market. Really back down in towards our higher time frame key level support here as well. Of course, this one does have earnings. Day two had some continuation lower here as well. Now we're having a little bit of a mean reversion, a little bit of a bounce here in the pre-market. The key levels that we're going to have marked out today, of course, is going to be that Wednesday's lows once again. If you do want to see some upside now, reclaim back above our Wednesday's lows for a potential push back up in towards our previous day highs. Another possible scenario, bounce play here off our 194 for this continuation back towards the upside here as well. So a couple scenarios that we have on AMD coming into market open. Similar thing to Nvidia, if we do reject, we can be looking for the pop and fade for a push down in towards our previous day close, which is at 192. With the overall market bouncing, we'll just keep an eye out on the reaction that we have within the first 15 to 30 minutes, as I mentioned. Plus, we do have consumer sentiment as well. As for Apple, this one is still holding up compared to the overall market. So nice breakout to start off the week. Now we're having a little bit of reaction here off this 278. Now what we like to see on Apple, if you do want to see some upside today, is the break above our previous day highs, or of course, the pull back down in towards our 272. So if you want to see some upside today, break above this 178 for continuation towards the upside. Another possible scenario, bounce play off our 172 for this continuation higher here as well. So a couple scenarios on Apple. Yesterday, tried breaking above, a little bit of seller stepped in as the markets headed lower, but still holding up compared to the overall markets. So we're just going to be looking for, as I mentioned, break above our previous day highs or some sort of opening drive play for this continued push back towards the upside here as well. As for Google, recently had some earnings, came down in towards that earnings low, nice bounce play, and now we're essentially right back in between the middle of the earnings high and low. So coming into today here for Google, what I'm going to have marked out is really this 328. 328 is basically the exact middle, right? 50% of the earnings high and low. If you want to see some upside, maintain above our 328, preferably now break back above our previous day highs for continuation. Downside, of course, is going to be in play underneath that 326. As for Microsoft, this one finally filled our full daily gap. So this is exactly the key level that we talked about here on Microsoft. Break underneath this daily gap, 430, next level all the way down and towards that 398 gap, all the way back from May of 2025. So for Microsoft, this was our earnings gap. Now we gap down, plus we filled the gap, and you can see some buyers are stepping in here off that 394. So for Microsoft, now our full main objective has been hit. I'm not that interested in shorting Microsoft anymore since we already met our main objective. So coming into today, really not too much to talk about. You can just still mark out our pre-market range. We could still come fill the gap that we created over the night. Back down towards your 394, and then now longs are in play back above our pre-market highs for this potential continuation for a push up and towards our 408. So that's what we have here for Microsoft. As for Meta, the key levels that we have, of course, is that earnings low. We ended up filling the gap towards the downside. Now for Meta, the key levels that we have marked out, of course, is going to be our 676, and then we also have our 666. So for Meta, really not too much to talk about. If you're looking at the higher time frames, this one's continuing to show some weakness. Now with this bounce here in the pre-market with a little bit of a bounce yesterday, key levels I just have marked out is really just going to be that Wednesday's lows. That Wednesday's lows that we have marked out, 666 here, 668 here on Meta. If we break back underneath, we can see some continuation lower. If we bounce, we can see this push back up and towards our 682. As for Amazon, this one recently had some earnings, dropped towards the downside, down about 8% here in the overnight session. Now, if we go on to the daily time frame, this is what's going to be key here. As you can see for Amazon, we're actually breaking underneath plenty of support, right? With this earnings gap down here, breaking underneath lots of key levels of support. We have room down in towards this full gap that we created. So Amazon could see some more downside in towards our 200 key psych along with our 193. So that is the level that we're going to have marked out coming into today. Let's mark out that 194. We can also mark out that 197. Other key levels, let's just mark out now. It's just going to be our old lows that we've created here on the daily chart. If we now go into the 15-minute time frame, you can see these levels are holding up very nicely. So a couple key levels, we have our 207, we have our 201 along with our after hours lows, which is our 197. So for Amazon, if you do want to see some downside coming into market open, key level that we like to see reject off of 207 for this potential push down in towards our 197 and our 194. As for Netflix, this one consolidating a little bit, needs to get back above this 82.50. So coming into today. So the keys right here, as I mentioned, closer to our Wednesday's lows that we created this week. Similar thing here on the SPY. I'm still leaning more towards the downside just based off market structure this week. What I'll be looking for a potential pop and fade for a push down in towards our previous day close right off the bat. I'm going to be very cautious today just with this market bounce. And of course, higher time frame is still very much intact towards the downside. We do have consumer sentiment as well at 10 a.m. So we're going to be a little bit more patient coming into market open. As for some of my main watches, I'm not that interested. Shorts are going to be a little bit more difficult unless we're just looking for the mean reversion, which is essentially the previous day close, because Nvidia bouncing off key levels of support, Tesla, kind of similar thing, bouncing off key levels of support. The short is going to be the push down in towards our previous day close. It would essentially be the rejection off our previous day highs on a lot of these tickers, right? We're just looking for the previous day high reject for this push down in towards our previous day close. So that's basically the short position coming into market open. And that's why I'm being a little bit more cautious, is because we are bouncing off of key levels of support here on the higher time frames, but ultimately this week the price action has been very bearish. So we're bouncing off key levels of support, we're gapping up, but the higher time frame is bearish. So now we're going to be a lot more patient, and we're just going to wait for either one, the lower time frames to flip back bearish so we can look to short towards the downside for that gap fill, or if price does want to get above our previous day highs and hold, going to be a lot more selective and definitely going to be on lower sides if I'm going to try and trade this back towards the upside. So Now let's go on to a few other names that we now have as well. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that one is in the description below as well. Is that the one you mentioned, teaching what tools and how to draw your key levels? No, I'll post that in. If you are in the Telegram, I'll post the unlisted link in there on how to draw the key levels. Or if you scroll up, I posted it, I think it was a week ago or so. Are your live sessions like the ones you posted yesterday? Yeah, every single day. Some of you guys are asking. The live sessions, we kind of go over the thought process. I share my screen as well, just going over any of the trades that I do take. If I do take any trades in real time, I'll let you guys know, of course. Okay, let's go on to some tickers that we have. Palantir coming to market open. A little bit of a nice bounce. As you can see, pretty big push towards the downside. Palantir pulling back pretty significantly here, back in towards essentially our key levels of support, all the way down in towards that 130. So if we go into Palantir, nice kind of bounce here in the pre-market, right back up in towards our Wednesday's lows here as well. So similar thesis, if we reject right off the bat, we could be looking for this continued push towards the downside, right back down in towards that 130. This is a gap fill that is in play. The reclaim back above our key levels is going to be back up in towards our 192. Sorry, our 142. So this is what we have for Palantir. Just keep an eye out on our 137 coming into market open. How to be on Telegram, subscribe using start. If you're subscribed, then you can find the video in the weekly trading outlook. So if you're in the accelerator, I have the video posted in the weekly live education. We have a bunch of videos as well, and you can find the link from there. As for MU, nice little bounce here off our 368. As you can see, some buyers are stepping in nicely off this low, back above our previous day highs here now as well. So this is the level that we can have marked out. Just mark out our previous day highs, 388. If you do want to see some upside, bounce play off our 388 for this continued push back up and towards our 407. So keep an eye out on MU today off our previous day highs. As I mentioned, break back underneath, we can see this reversal back down in towards that 375. Also a potential, if price pushes higher right off the bat, you could also still be looking for that pop and fade for this continued push back down in towards our previous day highs and below. If we go on to a few other tickers here, similar thing, TSM reclaiming back above key levels, look for that previous day highs, hold for continuation higher. Intel is one of my favorite tickers. So Intel, keep an eye on Intel. So Intel, higher time frame, still very much intact. Overall markets are dropping. Intel is holding up. As you can see, higher lows are being built here. Maintained above key levels of support. We have this earnings gap fill back towards the upside. If we can reclaim back above our 50 key psych, we can see Intel push towards the upside. As for Intel yesterday, a little bit of a fake out just because overall markets are dropping. So you can see the key level that we have marked out is just going to be this 50 key site. You can see how many touches we've had in this general area. A little bit of rejection here yesterday as well. If we can break above hold on Intel, we can see this nice push back up and towards our 5150s and potentially higher here as well. So keep an eye out on Intel. It's going to be the reclaim back above our 50 key psychological level, or of course, now above our previous day highs for continuation here as well. So keep an eye out on this ticker coming to market open. As for SNDK, this one, a little bit of a pullback here as well, but still very much bullish. Key levels that we have marked out, essentially this earnings range. And as you can see, bounced off our earnings key levels. We bounce once again here off our 550. So now for SNDK, key levels that we're going to have marked out is going to be our 620. Go back onto the 15-minute time frame. Key levels coming into today is going to be that 620 along with our previous day lows. If we do want to see some upside above our 620 is going to be key for continuation. If we bounce off the middle of the range, right, you want to be a little bit more cautious, but this is also in play for a pushback towards the highs here as well. So this is what I have for a couple of these names coming into market open. AVGO, this one was green here as well. Yesterday, kind of bouncing off key levels of support. So for AVGO, my key level that we have marked out is basically this full gap fill that we have created. So as you can see, we have this full gap fill. This is from earnings back in September of last year. You can see some buyers are stepping in here off our 305. So our 305, some buyers are stepping in, but it needs to reclaim back above our 326. So what we like to see is the continued push towards the upside. Another possible scenario here is the bounce play off your 310. So that's the key level that we have marked out. Your mic might be working. If that's the case, you just refresh the stream and everything should be good. But that's what we have on TSM. Now let's just go on to gold, silver. We'll check out Bitcoin here as well, just because this has been moving quite a lot the past few weeks. So as for Bitcoin, really coming back down and towards our previous retest level. So this is essentially just the area that we broke out from. So buyers are going to step in here. On Bitcoin, momentum is going to start slowing down just a little bit towards the downside, but broke underneath really the 74, 540. Now we're just back inside, as I mentioned, this period of consolidation before we had this massive break towards the highs. Now for Bitcoin, we're most likely going to bounce here and just kind of consolidate in this general area. You can also see we have multiple touches around this general area. So as you can see, buyers are stepping exactly where it's supposed to. Can Bitcoin head lower? Yes, it can, but it's most likely going to have this nice bounce just because we've had multiple touches. This is the area that we broke out here from as well. If I was to mark out an exact area on Bitcoin, the key level that I have marked out would be this previous old high, right? 60, basically your 60,000 right off the bat. And this is the exact level I like to see Bitcoin hold. So at least in the short term, you can see nice kind of bounce off your 60,000, a little bit of a mean reversion. The key level is now back towards the highs. It's going to be all the way back up and towards our 73. So Bitcoin, we can see this bounce play back up and towards potentially our 73,000 here, which is the area that we broke down from. Another level that we can have marked out here is just going to be this up close candle, which is our 68,000. So for Bitcoin, I personally like to see the reclaim. If you want to see a push back higher, maintain above our 68. If we reject off this level, we can see a little bit of a pullback, but right now, after this big push lower, I do expect some sort of mean reversion back up and towards our 73,000, which is the area that we broke down from. As for gold, this one, nice kind of bounce play. It's going to consolidate. It's going to do something similar that it did last time, but nice kind of bounce here off our previous level of resistance, which is our 4,400. Now for gold, really bouncing exactly off the key areas that we have marked out. So these ones are playing out nicely. Nice bounce here in the overnight session. Now we like to see the reclaim for a pushback towards the upside. As for silver, this one actually showing a little bit more relative weakness, broke underneath our key level. So broke underneath our key pivot point, which is our really your 75 here. If we do want to see any sort of reclaim, or sorry, any sort of push higher, the reclaim needs to be in play. You like to see a potential kind of inverse head and shoulders form here on the higher time frame. So this is the key level here on silver moving forward. If we reject, of course, we're going to see this continuation lower, but reclaim back above, we can see this push back up and towards our 88. So coming into market open here today, let me go over my game plan once more. And then I am going to get ready for market open. Key levels that we have is our 602. As I mentioned, if we want to see some upside right off the bat above our previous day highs, if we reject, we're going to see this push down in towards our previous day close. SPY, similar thesis. If we reject right off the bat, we could be looking for our previous day close for this continued pushback towards the downside. As for my main watches coming to market open, keep an eye out on Tesla off our 402 previous day highs. Nvidia also in play off our previous day highs. EMD, another one, keep an eye out on our 200 key psychological level. As for some upside, the only names I really like for upside here, Apple, if we can get above our previous day highs or find some sort of low risk entry for a continuation higher. I do like Google here as well for potential earnings reversal play. If we can get above now our previous day highs for potential move back up and towards our 346. And then I do like a couple of these semiconductors here, MU, TSM above key levels. And then Intel is going to be my one of my favorite watches here as well, above our 50 key psych level. So a couple of names to look for the upside. As I mentioned, I'm going to be very cautious coming into market open. Today is a Friday as well. After having really solid trends towards the downside, right off the bat within the first 30 minutes is going to be a telltale sign for today. If we're going to have some solid price action, just be a little bit more cautious of a couple fake outs, at least right off the bat. As for everything else here, yeah, Amazon pushed towards the downside. We could potentially keep an eye on Amazon. It doesn't have too much room, but pop and fade here is in play for a push down in towards that 194. So I'll keep an eye on Amazon. As I mentioned, if we do want to trade any sort of earnings name, we do need what's called an IV flush. So if price pushes lower right off the bat, you want to be a little bit more cautious. But if you can have this pop, we can be looking for, right, in this case, the 200 puts. So for today, expiration 200 puts. If we pop higher, right off the bat, we could be looking for the 200 puts for this rejection basically off our pre-market highs for a push down in towards 200 and below. So that's basically what the IV flush is. Besides that, yeah, that's most likely going to be it for me today. Not really too much to talk about here now. As I mentioned, be a little bit more cautious. There's a couple watches, Apple, Google, Intel. I don't have any hard watches that we're primarily looking for since I'm a little bit more neutral coming to market open. So a lot of them are just going to be based off the reaction that we have off key levels. Tesla, Nvidia, AMD, keep an eye out on your previous day highs. Similar thing here with the QQQ. It's the NASDAQ. The QQQ is the NASDAQ. As for the rest of the tickers, yeah, as I mentioned today, be a little bit more cautious. If you're up nicely for the week, you want to trade today, risk percentage, or risk a little bit of amount if you do want to trade on coming into today. So yeah, that is going to be it for me today. I am going to get ready for market open here now. If you guys did enjoy this, appreciate it if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. As for my YouTube video, I'm going to have a full weekly recap posted on my second channel later today. I'll have a weekly outlook for you guys posted on the weekend. I also have a YouTube video coming out on Sunday. That one's a good one as well. And yeah, with that being said, hope you guys have a great rest of the day. Hope you guys have a great weekend. And I will see you guys all next week. All right, take care, everyone. Peace.